What is up, everybody? Welcome to the Halftime Snacks podcast. This show features short interviews that you can listen during the halftime of your favorite sports events. Every Tuesday, I host fun conversations with talented people in the sports industry, where we'll learn from their stories, knowledge, and experiences. So go grab your favorite snack and come snack with us. Are you ready? Let's go! Joining us today's halftime snack is a man with great knowledge in math and finance. He holds a bachelor's in actuarial science in economics. He worked 3 years as an actuarial analyst at Allianz Life, and he then left his job to found SimBull, which is the sports stock exchange, back in September 2020. This platform actually allows sports fans to profit off their sports knowledge by investing in virtual shares of teams and trade those shares with others in the market. So it's a really cool project, something disruptive, something new, something that I've never came across. So I'm happy to introduce you guys, ladies and gentlemen, Kenneth, Giles. Kenneth, welcome to the Halftime Snacks, mate. How are you?
Thank you very much for having me, Ronan. I appreciate it. I'm excited to dive deeper into SimBull and talk a little sports business with you.
Yeah, absolutely, mate. The way we start the Halftime Snacks is that we first throw in a fast icebreaker to see how you break it. The one I have for you is, what's your favorite fast food restaurant of all times?
Okay, so this one, this is going to be regional. So I'm from the Midwest United States. We have a fast food restaurant called Culver's. It's similar to a McDonald's or a Burger King or one of those big. It's a burger joint, but they have the best frozen ice cream custard in the entire world. Unbelievable! Every time I go on a road trip, we're stopping at Culver's.
Culver's. Okay, I'm gonna write that down. Thank you for sharing that. And that also shares a little bit more about you and about where you came from and who you are. So, but maybe let's talk a little bit more about you a little bit before we get into the whole projects and stuff. You worked in Allianz for 3 years, which is insurance, and now you switched to sports. But maybe tell us a little bit more about that transition from working at that industry and at that company. How do you compare sports and insurance, specifically in your background?
Yeah, absolutely. So the short answer is they're very, very different worlds, right? Insurance is this old, archaic model that's been around for thousands of years, really slow moving. And sports is a fast changing, exciting environment with a lot of content creation, all that stuff. So completely different. But my background as an actuary for an insurance company, my specialty was designing financial insurance products. So annuities, investment vehicles, life insurance. So really background oriented in financial instruments. But I've always had a love for sports, fantasy sports, sports gambling, right? Kind of the analytical side of sports. I was an athlete growing up, but I was always a lot smarter than I was athletic. So using the statistical side to really be involved in sports is always something I wanted to do. So the transition, honestly, from my background in investing to sports was taking the knowledge I had in the financial industry, but combining it with my passion, which has always been my passion, which is sports and fantasy sports and sports gambling.
Yeah, I love that because it's very related to what I do, and I do have also a background at finance. It's what I studied, but I also love this side of sports and analytics, as you said, and I'm big on technology, which we're gonna be discussing much further. And so content is one of the ways that I try to express that, and I guess that you had similar let's call them this impulse that you had to express your love and your passion for sports. And I wonder how the idea came about of SimBull, how exactly you guys came up with it, or what you saw at one moment during your time at insurance that you're okay, I need to express my passion and love for sports through something, and then SimBull was the answer. How exactly did it happen?
Yeah, absolutely. So as I sort of alluded to, I've been sports gambling for a long time. With a background in statistics and finance, I built my own statistical models to try to beat the sports book. And it actually started while I was losing a bet on an NFL game. So I had bet. This would have been 2019. The Bengals were playing the Patriots, and the Bengals were 1-14 at the time. And I actually bet on the Patriots to cover bet on the Bengals to cover against the Patriots.
Mm-hmm.
And in the first quarter, they were down like 28-0. And I was sitting there, I'm like, I am such a moron. Like, why would I bet on the Bengals? They're 1-15. Like, I was sitting there fuming for the entire game. There's no way to be the sports books. There's no way to be the sports books. This is ridiculous. Why would anyone bet? Like, this is the most ridiculous thing in the entire world, right? It's kind of a degenerate sports gambler, what they do about it. They make a bet and then they're complaining about it. And then I started thinking about this and like, I have a background in stocks. I have a background in investing. I worked for an investment firm. I was like, why is there not a stock market for sports? Like, I know I'm better than 50% of the sports gamblers out there, able to beat them essentially. And that's where the idea really came from, creating this stock market for sports to decentralize call it the sports gambling industry or disrupt the sports gambling industry through a peer-to-peer market that allows more fans to profit off their sports knowledge. Because that's what I was looking to do as a sports fan. I was looking for fun ways to engage with teams, to use some money to try to make some money. And that's where the idea of SimBull really came about.
And does the pain itself of SimBull is just trying to get people to see this as an investment, to have it as like an alternative betting method, let's call it, or was like a different pain that you like started when you started like discussing it with peers and friends and like family and stuff, like you start seeing that there was more to it, like there was more like core need or pain that you were up to something, you know what I'm saying?
Yeah, absolutely. I think there were two really big things that we were trying to solve with the sports gambling side of it. So first is, as I talked about, the vig of the sports book. So if you go place a bet on a sports book, you're paying that 10% vig or the 5 to 10% vig to the sports book to be able to take that bet. That's a pain point for a lot of people because it's a really high transaction cost in today's day and age. So one of the things that we were trying to do with SimBull is to lower those transaction costs to create a better opportunity. The other thing that we were trying to solve was introduce longer term opportunities in the sports gaming market. So right now in the sports gambling market, I would say 95+% of bets are focused on single game wagers, where at the end of a game, either there's a binary outcome, either you double your money or you lose it all. And those are the only two things that exist right now. What SimBull is aiming to do is create a longer term platform that allows you to be like, hey, you know what? The Bengals, the NFL, the Cincinnati Bengals might not be good right now, but I think they're going to draft Joe Burrow. And in 2 years, I think they're going to be really good. So I want to buy them now, hold them for 2 years and be able to sell them for a profit with the idea that, hey, I knew they were going to be good before everyone else did. So the other idea of this stock market for sports introduces a longer term nature to it, essentially, that allows people to invest for, 1 day, 1 week, 1 month, 1 year. It's really up to them. And by doing so, allows people to profit off their sports knowledge in different ways.
Yeah, that's an interesting point, because I do remember that like the longest long-term bet you can make is like just by the end of the season, right? Like who's gonna end up with the trophy, and I do think that there's like some value in your proposition, because you're also allowing for symmetrical payouts, meaning that not the one that wins earns all the profits, right? But second place is also valued higher, the third place, etc., etc. So that's an interesting point, and I do think that there's value in that. I wonder what were some of like different challenges that you faced early on when you started SimBull and you started like maybe trying to raise capital, or maybe there are those are things that you're currently challenged by or challenged with. So what are some of like the challenges that you faced early on, maybe that you're also still facing, but that you can share with us, and how exactly have those changed throughout like the time that the pandemic is starting to fade out and that we're getting back to normal?
Yeah, absolutely. I think there's two main challenges that really come to mind. The first is whenever you're starting a market-based system, whether it be, say, a social media channel or a market that requires a lot of people, like an eBay or something like that requires a user base, it's really hard to get enough of a user base to create a really good product. Right. So in our market, we're a peer-to-peer market, meaning if you want to buy a team, you have to buy from someone else, and you want to sell a team, you have to sell to someone else. Well, there's only 50 people on the platform. It's really hard to find someone else to take the opposite position as you. So that was one real challenge that we had to overcome. In a market-based setting, is finding that liquidity for people to get in and out of positions when they want to. That's still a problem that we're overcoming, right? We've got just over 1,000 users on the platform now and growing. So So it's still an issue, but we've been able to overcome that. And once we hit the 1,000 mark, it's been really, really promising from there. So that was one side of it. The other side of it is our product is really, really unique in the market. There's nothing that really exists that's directly similar to it. So when onboarding new users to the platform, there was an education barrier that we had to solve, right? Of how do share prices move? What are win payouts? Why are those valuable to me? Why should I care about them? Just because our platform is a little bit different than, say, traditional sports gambling or even fantasy sports, the education barrier to get people to think through like, okay, this is why the share price went up. This is why the share price went down. And using those real life examples, there's an education barrier to overcome.
Yeah, I think that the price of disruption or the price of innovation is that element of education, right? That you're talking about, that like people haven't really seen this before. I wonder like how much of an effort Apple had to do to educate on how people should use smartphones, right? Of like with like absolute like touch screens and stuff. So like I do think that there's this price. It's not gonna be like it's not a price. It's more like a cost. Cost of innovation equals the cost of education. So how do you get like people involved? How do you get them convinced that this is actually like a product that they're gonna like? How you actually also get them to advocate for you? So there's like many things there, which I do think there are cool challenges to have, because that's what happens when you're pioneering and trying new things. But we've been talking a lot about the platform, but maybe for those listening that don't really know how it works or what type of features does the platform have. Let's say I'm a new customer, so what should I expect if I come to SimBull, sign up, create an account? What should I expect?
Yeah, absolutely. So our tagline is the best way to describe it. We are the stock market for sports teams. So when you come to our platform, what you're really doing is you're buying and selling these virtual shares of professional sports teams. So right now we have NFL, NBA, MLB, NHL, and college football in the United States. So if you come in, you'll be able to trade these shares like you would cryptocurrencies, NFTs, companies in the stock market. So on the platform, there's essentially two ways to make money or lose money on the platform, because we are a sports gaming platform. The first is what we call win payouts. So think of it like a dividend from a company. Every time a team you own wins, so say you own a share of the Miami Dolphins on the SimBull market, the Sim Dolphins. Every time they win a game, you earn a win payout of 50 cents. So that's 50 cents per share per win for an indefinite amount of time. What that win payout does, it provides these stock market like value share prices for every team. So for example, if you think the New England Patriots are going to win more games than the Miami Dolphins, that means they're going to earn more win payouts, which means their share price should theoretically be higher. So then what happens is, as players get traded or drafted or injuries or performance, these teams fluctuate in value just like the stock market based on their expectation of being able to earn these wins moving forward. So that's the way you make money or lose money on the platform, is if you buy low and sell high on a team, you make money. If you buy high, they get worse, and you sell low, then you're going to lose money on the platform.
And is that payout ratio like something specific, like 5% of the price of the stock or of the share, or like, because I'm trying to relate how that ties up, comparing it, let's say, to the actual stock market, that companies are going to pay maybe a premium higher than the risk-free rate from treasury bills or stuff. Like, what is maybe a classic dividend payout ratio in SimBull?
Yeah, absolutely. So the way the win payouts work in the way the dividends are described is they're actually a flat payment no matter what. So whether you own a $70 share of the Kansas City Chiefs or a $30 share of the New York Jets, it's going to be 50 cents per share. So that's a completely flat payout. And the reason we decided on that is to make it really simple for the user. We didn't want to deal with percentage yields or percentage of share price or anything like that. We want it to be really understandable where, hey, if they win a game, you're going to get 50 cents. And then the user's job is then, okay, what am I willing to pay a share price for? What am I willing to buy a team for? Knowing that if they win one game, I'm going to get 50 cents. If they win 10 games, I'm going to get $5, et cetera.
Right.
Now, payouts are different for leagues based on the number of games in those leagues. So for example, NFL 17-game regular season, it's 50 cents per win. Now in the MLB, there's 162 games. So it's 5 cents per win. And that's just based on the number of games in a season.
Gotcha. Okay, that makes a lot of sense. I'm very like in my mind currently listening to you. I am comparing this project a lot with like new NFT projects and the whole like blockchain new ecosystem that allows new projects to be created, and they have like their specific economics related or tied to like cryptos. Not sure if you guys thought about creating it as a like a crypto project or something. But that's not really my question. My question is more towards like the economics of the platform. Like if you're thinking about creating a specific amount of shares per team, or the specific like how prices are set. So maybe guide us through a little bit more on like the rationale or the concept of how many shares exist per team, how many what is the price, and why you chose that on each one of those.
Yeah, absolutely. So we can definitely dive into the blockchain discussion later because that does have an interesting relationship to what we're trying to do. But right now we are a Web 2 solution, meaning we have a website. We're actually coming out with an app in May, which I think we'll talk about later. But yeah, the way the platform works. So when we launch a new league into the market, so for example, NFL, because NFL is my favorite sport. So I'm always biased whenever I give examples. It's always NFL examples. When we launch it, NFL onto the SimBull platform, what we did is we created what we call an initial share offering. So we set the prices of all the teams in the NFL market. We sold them out into the public. We sold 150 shares of every team out into the market. That's how many shares are outstanding of all 32 NFL teams. Now that they're outstanding, they're traded between users. So share price is solely determined by the users in the market. Whatever they're willing to pay for a share, and whatever someone's willing to sell for a share, that's the price that they agree upon. We don't have any algorithms. We don't set prices. We don't say like, oh, they're 4-2, so they go down $1 a share. None of that. It's all based on the supply and demand in the market. So the more people want to buy a share, it's going to go up in value. The more people want to sell a share, it's going to go down in value. So that's how the economics of the share price works. Is it's all user controlled and user dominated eventually. Now you had a good question there of like, okay, we have 150 shares out per team, and we've got X amount of users. What happens when we get to 100,000 users and 500,000 users and 1 million users? What happens there? What we'll do is called secondary offerings to introduce more shares into the market. So that's our growth strategy. That actually hasn't been defined yet on our platform because we're still in an early stage of a beta test. But our plan, which you talked about, blockchain, which we can dive into, is to basically create a white paper which lays out all the economics of the platform governed by contracts, and then that'll be fully outstanding in the market.
Yeah, and it's interesting, but is there a specific reason why you guys chose 150 shares per team, or was that just like the number that was probably like the easiest or something?
Yeah, the 150 shares per team was twofold. One is we needed to do enough it was basically the supply and demand question, right? If we started with 1,000 shares per team, but only had 500 people on the platform, there just wasn't going to be enough people to buy all the
Right.
shares. So we had to make sure that the shares were able to sell out, but also that there were enough to make sure that the prices could move and one person couldn't hold, every share in the market essentially. So we settled
Right.
on 150 just as a starting point to make sure that there was enough growth opportunity for more users coming to the market, but not so much that it was overly flooded.
Okay, yeah, that makes sense. And in terms of like, let's say, because one thing in the stock market that exists is the market cap, and that is just the number of shares multiplied by the price of each share. So I wonder like what was the thought process around that? Like, are we gonna set the highest like team market share based on like their last rankings from last season, or are you going to like do it based on some specific like projection based of like sports betting and how they think they're gonna look like in the next couple of years? Like, what was the rationale behind pricing and figuring out like how much each team is gonna be valued?
Yeah, so during the initial share offering, we did basically a simple present value calculation. So we used some gambling data, some team data to figure out, what is our projected win total for each of these teams over the next 5 years, and basically did a discounted cash flow where it's like, okay, if they win 50 games over the next 5 years, discounted cash flow at the interest rate, and that's the share price. So we just did that very simply for every team, and then we sold them out into the market. Some teams went up right away in value, some teams went down right away in value, just based on pricing and efficiencies. But now once they're out in the market, now like we said, it's all based on the users. So whatever the user's, algorithm or present value calculation or just gut feel for whatever team should be priced, then that's the price of that team.
That's great. That's great. And I'm very curious about specifically the business model of you guys. Like, how are you planning to take a share or take specific cut on like trades, or like how exactly are you guys planning on bringing in revenues? And if you already have, how efficient has that been?
Yeah, absolutely. We actually are revenue generating already. So we have we have four main revenue sources. The first two do come from the market. So on our platform, we do take 1% of all trading volume that's done on our platform. So if you make a $100 trade, we'll take a $1 fee off that for revenue generating purposes. We do also offer a premium subscription called SimBull Gold. What that allows you to do is get unlimited free trading all year round. It gives you additional access to tools, data, analysis to help you perform better on the market. So those two things do come from the users in the market, both the trading fee and then the subscriptions. And then we have two external revenue generating sources. First is advertising on the site. So, the win payouts that we offer as sort of the reward for being on the platform, we get advertisers to sponsor those. So brought to you by Fanatics, brought to you by Nike, right? All that stuff. So being able to profit off that a little bit, and then also the market data itself. So we actually haven't sold that data yet, and not the user data, the market data. Just want to make that clear. We actually haven't sold that yet, but the market data provides really unique insights into how fans feel about certain teams. So for example, the NFL draft is later tonight. We'll see a ton of movement in the NFL market after, a team trades up and drafts a quarterback, or they trade down, or a player comes out and gets traded, Deebo Samuel, something like that. What our market data provides is an actual number to being like, oh, how valuable is that player to that team based on how people are thinking about it. Great example last year is Aaron Rodgers at the draft, quarterback of the Green Bay Packers, says, hey, I don't want to play for the Green Bay Packers anymore, right? I'm done. I'm out of it. That night, they fell over 15%. The Sim Packers fell over 15% in our market, meaning people think that Aaron Rodgers is worth about 15 to 20% of the team's value, right, on this stock market for sports. On the flip side of it, the Chicago Bears traded up to draft Justin Fields, and they went up just over 10%, meaning the fans thought that the Justin Fields pick was worth about 10% of value to that share price. That provides really unique insights and data into how fans, kind of a crowdsourcing for how fans feel a certain team is performing.
Yeah, that's it's very creative, and also the other ones, the other three that you mentioned, I think they're really creative, and that they do make sense. I'm also very curious in terms of like growth. You spoke a little bit about the app, which I do want to you to maybe share on the rationale behind, okay, why we need an app, and also like it's actually an interesting question to maybe leave us thinking about. But with the whole like NFTs and blockchain and crypto, don't you think that you're already a little bit late on that, or you think that is like you guys want to like build it first on a Web2 way that it makes sense to everyone, and then jump on that train?
Yep, exactly. So right now, we are just a website, a mobile-based website, so you can get to it from your phone or your website. But we are launching a mobile app through iOS App Store, Google Play Store. Hopefully, middle of May is when we can get it completed and launched by. That's been our number one feedback of people on the site so far. Our feedback so far is like 80% of people who come on absolutely love it. Actually, 85%. We just did a survey. 85% of people absolutely love it. They love the market. They love the win payouts. They love the engagement. Super fun. Number one feedback of every single one of them was, you need an app, you need an app, you need an app. Like, I need push notifications. I need easy access, blah, blah, blah. So the app is definitely just to appease the current users and also make it really accessible and mobile to a lot of people. Also create, like I said, push notifications, text notifications, that sort of stuff. So the app is going to be really, really cool. Not going to provide too many like brand new features that the website doesn't have, but people love apps and it's right on their phone. So we're excited about that. The future we see is for SimBull and honestly for sports gambling, for sports gaming, for fantasy sports, is definitely blockchain technology. That is absolutely the future, and that is what we're planning on for the SimBull market, transitioning that over. As far as the question on are we late to the party, the whole market is so unbelievably young that I don't think we could consider like, oh, we're late to the party, because no one has done what we're doing. And two, I think the verdict's still out on sort of the success of blockchain apps right now. I definitely think it's the future, but there's no like one blockchain app or decentralized app that is absolutely like dominating the sports space or the play to earn space or anything like that. So we're excited to be able to offer that to our users in the future.
Yeah, I guess my question was in terms of like being late. It's more because if you weren't if there was someone already dominating, then it wouldn't even be worth it to get in, or like I don't know, because as you mentioned, like it's so new and like there's just so much going on. I just in my mind, being there and being the one iterating on like data and trying out new stuff and seeing what resonates and building community and stuff, that probably is what takes time and not really the best practices. Although I don't know, like maybe no one really knows, so it's gonna be up to like the air. But I do think that you guys are doing it well by just building a product and then putting it out in a market that can scale properly through an app, and then maybe transition that into the blockchain. What's your perspective? Like, what's your vision on sports investment markets? Do you think this can scale into different verticals, or do you think that the sports investment market, because I wrote about this, probably you saw my article, I wrote about this, that there's very few limited ways in which you can invest and people in public can invest in sports. That is either through like stocks on the stock market, through venture capital if you have a lot of money, or private equity if you have tons of money, or you can buy also a team if you have if you're a billionaire or something, which most likely you're not. But
I wish.
What is your vision for that? What's gonna happen? Is that something that fans need, that fans want, and that fans are gonna figure out how to get through platforms like yours, or do you have like a specific like other type of vision for that?
Yeah, absolutely. That's a great question. I think we're in a really interesting time right now with sort of the blockchain Web3 stuff and the way ownership is starting to change, specifically digital ownership. 5 years ago, only a few early adopters knew what NFTs are, and now they're common, or they're becoming more and more common in the industries. And this idea of digital ownership is completely disrupting the gaming industry specifically right now, right? If you think about like Fortnite and like the skins, it used to be that skins were just something that existed on the platform, and now they're becoming NFTs where you can earn that skin and then be able to sell it for a profit. Or a game like Axie Infinity, where it's it's a play to earn a blockchain game where instead of just playing like World of Warcraft, you're basically playing World of Warcraft, but with a chance to earn money on it, which is a completely different mindset than I think existed 10 years ago. People are doing stuff with the intention of getting ownership and actually being able to profit off that. And I think sports are no different. I think, especially in the United States, with sports gambling becoming more and more legal, I think there's two sides of it. One side is people look at it as a really great way of entertaining themselves. This game's not interesting to me. I'm going to throw $10 down because it makes it more interesting when I have money on the line, right? So the entertainment aspect, but also the fan ownership aspect and engagement aspect of like, hey, I bleed Green Bay Packers green and yellow colors. I love the Green Bay Packers, right? I buy jerseys. I go to games. I buy tickets. I buy memorabilia. All of that stuff, it costs me money. And I think the world is starting to change a little bit, is where like, what if I can actually profit off my fandom? What if I can profit off my sports knowledge, the amount of time I spend reading about sports, thinking about sports, like watching sports? What if there's a way I could actually turn that into a profit? And I think the sports industry is going to start going that way with NFTs, with sports gambling, with peer-to-peer betting exchanges, with a stock market for sports. And I think that's where the future as a fandom is creating this really engaged fan communities around this idea of like a play to earn model or a fan to earn model, where if you're enough of a fan and you know enough about sports, you can actually profit off that knowledge. That's what I'm most excited about for the sports community moving forward.
Yeah, it's the whole like new concepts opening up so many different business models and opportunities for platforms and companies like SimBull, which makes it super exciting. And your vision sounds pretty much to the point and very exciting. I'm looking forward to what's gonna happen with you guys in a couple of years. Last before we go, I have a personal question for you, because that's the way we also wrap it up here on the halftime snacks. The one I have for you, it's maybe an interesting one. Suppose you'd be running for president, Kenneth, of the United States of America. What would be the main reason why people should vote for Mr. Kenneth Giles?
Oh, wow. If I was running for president of the United States, what would be the reason you vote for me? I'm not 75 years old. That's the number one pitch right now in the United States, right? Whether it be, we're not getting into politics. I don't want to pick a side, but my pitch is I'm not 75 years old and I'm competent. So there we go. Take that for what you will. But I think that'd be the biggest pitch right now that Americans are looking for.
Thank you very much for tuning in. If you enjoyed this episode, hit the subscribe button and leave a review on Apple Podcasts. If you enjoy learning about the business and technology behind sports, make sure you subscribe to the Sports Tech Biz newsletter. I'll leave the link in the show notes. See you all next week. Bye-bye.